Picture yourself waking up this morning. You brew your coffee. You settle into your chair. And you do what you do every single month. You open your bank account to make sure your Social Security payment has arrived. But this time, something feels off. The deposit you were counting on, the retroactive lump sum the government said was coming to you, simply is not there. Or perhaps you did receive something, but the amount was noticeably less than what your neighbor told you she got. And not one person has taken the time to explain the difference. Or perhaps you are among the many thousands of retirees who never even applied for spousal or survivor benefits because a Social Security employee told you years ago that it was pointless, that the offset rule would cancel it out entirely, and now you are sitting in your living room asking yourself, was I just quietly robbed of money that belonged to me? If any part of that feels familiar, please do not go anywhere. Do not touch that back button, because what I am going to walk you through over the next 10 minutes could genuinely be worth thousands of dollars to you. My name is Georgia, and I am a senior policy analyst with a focus on Social Security regulations, retirement income, and the federal laws designed to protect the benefits you have worked your entire life to earn. For years, my work has been about one thing: taking the dense, confusing language that comes out of government agencies and turning it into plain, straightforward English that everyday retirees can actually understand and use. Today, our topic is the Social Security Fairness Act, the landmark legislation that eliminated both the WEP and the GPO. And more specifically, we are going to talk about who is still waiting on their retroactive payment here in 2026, and the precise steps you need to follow to make sure you collect what you are owed. Here is what I am committing to you today. By the time this video ends, you will have a clear picture of exactly where you stand. You will understand whether money is owed to you. You will know the reasons why some retirees have still not been paid. And you will walk away with 3 specific actions you can begin taking this week, but please stay with me all the way through. Because near the end, I am going to expose one particular mistake, one that tens of thousands of seniors are quietly making right now, that is permanently eliminating months of back pay they should be receiving. Let us begin with a story that brings all of this to life. I want to introduce you to Robert. Robert is 71 years old and lives in the state of Ohio. He devoted 28 years of his career to working as a public school administrator, a position that contributed into the state pension program, not into Social Security. But before landing that role, back in his 20s and 30s, Robert spent many years in the private sector. He paid into Social Security faithfully for 14 years. He accumulated all the required credits. He had legitimately earned a benefit. When Robert eventually retired, he went ahead and applied for his Social Security retirement payment. But the windfall elimination provision, the WEP, cut into his check by close to $480 every single month, month after month, year after year. He never pushed back. He never fully grasped why it was happening. He simply accepted it as the way the system worked. Then January 2025 arrived with major news. The WEP had been permanently repealed. The Social Security Fairness Act had been signed into law. Robert was going to have his full benefit amount restored. On top of that, he would receive a retroactive lump sum payment going all the way back to January 2024. Robert exhaled with relief. He called his wife into the room. He shared the news with friends and neighbors. And then he waited. February came around. He pulled up his bank account. No extra deposit. March arrived. He picked up the phone and called Social Security. He sat on hold for well over an hour. When a representative finally answered, she explained that his case was still being worked through. Cases with added complexity, she said, take more time to process. April came. His monthly benefit did increase, but that lump sum retroactive payment, the one everyone had been talking about, had still not appeared. Now this is the moment where Robert's real problem comes into focus. His wife, Dorothy, had spent 3 decades teaching in that same school district. She carried a state pension of her own, and several years earlier, back in 2018, she had made the trip to her local Social Security office to ask about claiming a spousal benefit using Robert's earnings record. The representative who helped her that day looked at the numbers, looked at her pension, and delivered a verdict Dorothy has never stopped thinking about. With the pension you receive, the government pension offset would bring your spousal benefit all the way down to zero. There really is no reason to file. So Dorothy did not file. She did not submit any kind of formal application. She left that office and considered the matter permanently closed. When the GPO was repealed in January 2025, the entire landscape shifted for Dorothy. She was now fully eligible. She could receive a spousal benefit, potentially several hundred additional dollars every month, with absolutely no offset reducing it. But when the two of them finally walked into a Social Security office together in March 2025 to begin the process, the representative they met delivered news that left them both speechless. I can absolutely open your spousal benefit going forward, but when it comes to retroactive pay, I am only able to go back 6 months from today's date. 6 months, not January 2024, not the 12 months the law was built around. Just 6 months from the day they walked in. The reason was simple and devastating. Dorothy had never filed. Under the current policy the SSA is applying, new applicants are restricted to a 6-month retroactivity window, regardless of what Congress intended the law to accomplish. Robert and Dorothy had done essentially everything else correctly. They had confirmed their bank account information, they had verified their mailing address, they had made the calls they needed to make. But that single overlooked detail, the absence of a formal application from Dorothy, ended up costing them well over $2,000 in retroactive pay that is now permanently beyond their reach. At this very moment, thousands of seniors across this country are in the exact same position Dorothy was in. That is precisely what I need you to understand before we go any further. Let me now take you through what the official government records actually tell us. No guesswork, no secondhand rumors. Only confirmed facts drawn directly from the Social Security Administration, the Internal Revenue Service, the Congressional Research Service, and AARP. Fact 1. What the law actually does. On January 5, 2025, President Biden put his signature on the Social Security Fairness Act, officially designated as H.R. 82, and it became the law of the land. This legislation accomplished two permanent and significant things. The first was the full repeal of the Windfall Elimination Provision, the WEP. This was the formula that had been cutting into the personal Social Security retirement and disability benefits of workers who also happened to receive a pension from employment that did not withhold Social Security taxes. This included many state and local government positions, certain federal roles under the original civil service retirement system, and some internationally based employment. At its peak in 2024, the WEP was capable of slashing a monthly benefit by as much as $587. The second was the full repeal of the Government Pension Offset, the GPO. This was the provision that had been reducing, and in a great many cases completely erasing, the spousal and survivor benefits of retirees in those same pension-covered positions. The GPO formula subtracted 2/3 of the pension amount from the Social Security benefit. For countless surviving spouses and partners, that calculation produced a final number of exactly 0. Both of these provisions have been permanently eliminated. They no longer apply to any Social Security benefit payable after December 2023. Fact 2. Who received payments and when the Social Security Administration began distributing retroactive lump sum payments on February 25, 2025. By July 7, 2025, the SSA formally announced the completion of its payment process for all beneficiaries who had already been receiving WEP or GPO reduced benefits at the time the law was enacted. The final count came to 3.1 million individual payments, representing a combined total of $17 billion, and the entire process wrapped up a full 5 months earlier than the SSA's original projections. The average retroactive lump sum payment sent out came to $6,710 per recipient. If your Social Security benefit was actively being reduced by the WEP or the GPO before the law took effect, and you have still not seen a retroactive payment land in your account, then you need to take action immediately. I will give you the exact steps shortly. Fact 3. Who has not been paid yet, and why this section is the heart of everything we are discussing today. I am asking you to give it your full attention. There is a second distinct group of people, the group that Dorothy represents, who have not received payment and who may never receive it automatically unless they act on their own. The SSA itself acknowledged 3 specific categories of individuals who were still awaiting resolution as of early 2025. The first category includes people who never filed for Social Security benefits at all, because they calculated that the WEP or GPO would slash their payments so dramatically that applying made no financial sense. The second category covers spouses, surviving spouses, and divorced spouses who never submitted an application for spousal or survivor benefits, because the GPO reduction would have left them with nothing. The third category consists of individuals whose cases were already in a pending status at the SSA for separate reasons, who are also now affected by the repeal of the WEP or GPO. If your situation places you in any one of these 3 categories, a payment will not arrive on its own. You are required to file. Now, here is the piece of information that has prompted thousands of upset seniors and a cross-party group of sitting United States senators to demand answers and accountability. The Social Security Fairness Act clearly designated January 2024 as the official retroactive starting point for all eligible beneficiaries. However, the SSA has chosen to apply a pre-existing separate rule, one that caps retroactive payments for first-time applicants at just 6 months from the date of their filing. Here is what that distinction looks like in real terms. If you were already collecting a reduced benefit and the SSA updated your record automatically, you received retroactive payments stretching all the way back to January 2024, a full 12 months. But if you are only now submitting a brand new application because you never filed previously, the SSA's current position is that you are entitled to just 6 months of back pay, measured backward from your filing date today. Not January 2024, 6 months from today. Senators Susan Collins, Bill Cassidy, John Cornyn, and John Fetterman directed a formal letter to the SSA administrator in early 2026, calling on the agency to reconsider this interpretation. Their position was straightforward. Congress never drew a dividing line between existing beneficiaries and brand new applicants when it established the law's effective date. They called on the SSA to honor the clear language of the legislation and extend the full January 2024 retroactivity to every single qualified applicant. As of today, the SSA has issued no public statement indicating any change to its current approach. What this means for you is direct and serious. The clock is moving against you right now. Every week that passes without a filed application is another week of potential retroactive pay that slips permanently out of reach. Fact 4. The tax trap. Nobody is talking about. There is something else I need to bring to your attention. Something the majority of outlets covering this topic have glossed over entirely. If a retroactive lump sum payment arrived in your bank account during 2025, and for millions of you it did, that payment is considered taxable income. This is established IRS policy. Social Security benefits of all kinds, including retroactive lump sum payments, are recognized as income in the calendar year they are received. That means your 2025 payment shows up on your SSA 10D99 benefit statement and is counted as part of your 2025 gross income on the federal tax return you are submitting right now in 2026. For a significant number of retirees, that sudden and concentrated income spike has pushed them into a higher federal tax bracket than they normally occupy. For others, it has triggered what is known as an IRMAA surcharge, the mechanism through which Medicare raises your Part B and Part D monthly premiums when your reported income climbs above established thresholds. These surcharges can add more than $1,148 per person annually for individuals whose income exceeds $109,000. But the IRS does provide a legitimate mechanism to soften this impact. It is formally referred to as the lump sum election, and it appears as an option on your Form 1040 or your Form 1040 SR if you are a senior filer. Selecting this option allows you to recalculate your taxes as though the lump sum payment had been distributed proportionally across the earlier years to which it actually applies, rather than being counted entirely as 2025 income. If running that calculation produces a lower total tax bill, you go ahead and apply it. If it does not produce a saving, you simply disregard it and file as normal. Crucially, exercising this option does not require you to file any amended returns for prior years. All of the IRS worksheets needed to work through this calculation are contained in Publication 915, which is available at no cost directly from irs.gov. There is one additional piece of good news on the tax side. A new senior-specific bonus deduction was written into law in July 2025. It allows qualifying seniors to deduct up to $6,000 per individual or $12,000 for married couples who file jointly, provided that your modified adjusted gross income falls below $75,000 if you are a single filer or below $150,000 if you and your spouse file together. Depending on your income level, this deduction may meaningfully reduce the tax exposure created by your higher Social Security income. Fact 5. The scam warning. Before we move into your action steps, I need to spend 30 seconds on something that cannot wait. On February 20th, 2026, the Office of the Inspector General within the Social Security Administration issued a formal public advisory warning about a sharp and documented increase in fraudulent emails being sent to seniors across the country. These messages falsely claim to be from official government sources. They appear designed to give the impression that they are providing recipients with access to their personal Social Security account information. They impersonate real SSA employees by name, and in many cases, they specifically reference the WEP and GPO repeal to make the contact appear timely and credible. This is the official position of SSA.gov, and I need you to commit it to memory before this video ends. The Social Security Administration will never, under any circumstances, ask or require you to pay any kind of fee in order to open your benefits, raise your benefit amount, or accelerate the delivery of any payment. If you receive a phone call, an email, a text message, or any other form of communication from someone who claims they can help you recover your WEP or GPO retroactive payment more quickly, and they ask you to provide money, gift cards, wire transfers, or sensitive personal information, end the contact immediately. Then report what happened directly to the SSA Office of the Inspector General at oigssa.gov. All right, let us pull everything together. I am going to give you 3 specific, concrete steps to take this week, not at some point down the road, this week. Because as we have established, every day you delay is another day of potential retroactive pay that you may be giving up permanently. Step 1. Identify exactly which category applies to you. Visit SSA.gov and sign in to your personal My Social Security account. Pull up your benefit payment history and review it carefully. There is one central question you need to answer honestly. Was my Social Security benefit being reduced on account of the WEP or the GPO at any point before January 2024? If your answer is yes, and your retroactive payment has already come through, look carefully at the amount and confirm it appears reasonable given your benefit history. If your answer is yes, and you have not received any retroactive payment at all, pick up the phone right now and call the SSA directly at 1-800-772-1213. That line is completely toll-free. Representatives are available Monday through Friday from 8 in the morning until 7 in the evening local time. When someone answers, tell them clearly that you are calling to follow up on a missing retroactive payment connected to the Social Security Fairness Act. If your situation is that you never applied for benefits at all because you assumed the WEP or GPO would eliminate them, do not stop here. Go straight to Step 2. Thoughts? Step 2. Submit your application as soon as humanly possible. Please do not delay this. Do not sit back and assume the agency will track you down. Do not convince yourself that a check is already on its way without any action from you. If you are a spouse, a surviving spouse, or a divorced spouse who held off on applying because the GPO would have eliminated your entire benefit, a new application is not optional. It is necessary. There are 3 ways to get that application submitted. You can file online by going to ssa.gov, apply at any hour of the day. You can call 1-800-772-1213 between Monday and Friday, from 9 in the morning until 6 in the evening Eastern Time, and specifically request to be connected to the dedicated SSFA Claims Processing Unit. That specialized team was created for exactly this type of situation. Or you can walk into your nearest Social Security field office in person. Whichever method you choose, arrive prepared with the following: your official pension award letter or current pension statement, your bank account and routing numbers for direct deposit, your marriage certificate if you are applying based on a spouse's or deceased spouse's record, and a valid government-issued photo identification. One more important thing before you file. The SSA recognizes what is called a protective filing. If your documents are not yet fully organized and you are not ready to complete a formal application today, you have the right to send a brief written letter to your local SSA office simply declaring that you intend to apply for benefits. The date that letter is officially received by the SSA can function as your application date for retroactivity purposes, locking in your position in the timeline while you finish pulling your paperwork together. Chapter Step 3. Address the tax side of this before an unexpected bill shows up. If a retroactive lump sum payment was deposited into your account at any point during 2025, there are 2 specific things you should do right away. To begin, locate your SSA 1099 benefit statement for the 2025 tax year. This document reflects all Social Security benefits paid to you during that year. Check that your retroactive lump sum payment is reflected in the total shown. From there, as you work through your 2025 federal income tax return, whether that is the standard Form 1040 or the Form 1040-SR designed for older filers, make sure you look into the lump sum election option. This provision allows you to recalculate the taxable portion of your retroactive payment as though it had been received gradually over the prior years it actually corresponds to, rather than arriving all at once in 2025. If that recalculation produces a lower tax total, you apply it. If it does not, you set it aside. The IRS worksheets that walk you through the process are found in Publication 9015, available free of charge at irs.gov. If you are not confident in your ability to determine whether the lump sum election benefits your specific situation, please consider consulting a licensed tax professional, a certified public accountant, or an enrolled agent before you finalize and submit your return. Looking ahead, you may also want to contact the SSA and submit IRS Form W4V. This form authorizes the SSA to withhold a selected percentage of federal income tax directly from your monthly Social Security payment going forward, so that next year's filing season does not bring you a large and unwelcome surprise balance due. Those 3 steps, determining your category, filing your application without delay, and managing the tax implications head on, represent the most important actions available to you at this moment. Before I close out today, I want to share something with you that goes beyond the policy details. What happened to Dorothy in our story, and what is happening right now to thousands upon thousands of real retirees across this country, is not the result of carelessness or negligence on their part. It happened because these rules are genuinely and unnecessarily complex. It happened because government representatives gave people incorrect guidance years ago. And it happened because no one ever sat down with them and said, clearly and simply, here is exactly what changed and here is exactly what you now need to do. That is the entire reason I create this content. But I want to be honest with you about something important. YouTube's notification system is not reliable enough for the kind of information we are talking about. The platform's recommendation algorithm decides what reaches you and when. A subscription bell gives you no guarantee. And when we are discussing changes that directly affect your retirement income, your Medicare coverage, and your long-term financial well-being, being notified 3 weeks late is simply not acceptable. Social Security policy shifts, IRS guidance gets updated, SSA procedures evolve, and when those changes happen, you deserve to find out right away, not by chance, and not well after the deadline to act has already passed. That is why I personally want to invite you to become part of the Global Senior Alerts official WhatsApp channel. You will find the direct link waiting for you in the description section underneath this video. When you join that community, you will receive timely alerts whenever there is a meaningful development affecting Social Security, Medicare, pension regulations, banking rules, insurance policies, or travel guidelines that matter to retirees. And to welcome you, we are making our free Senior Benefits Protection Guide available to every new member at no cost. This resource walks you through the practical steps for protecting your Social Security benefits, recognizing and avoiding benefit-related scams before they reach you, and fully understanding your legal rights under the most recent federal legislation, including every regulation we discussed throughout today's video. Follow the link in the description right now. Join the channel, download your complimentary copy of the guide, and please share this video with your husband or wife, your brother or sister, a close friend or neighbor, anyone in your life who may have been affected by the WEP or the GPO. There is a genuine possibility they have never heard any of this information. And as we have covered today, time is not on their side. I am Georgia, and I will be back with you in the next video. Until then, hold on to this. Your Social Security benefit is not a gift from the government. It is not charity. It is compensation for a lifetime of work and contribution, and you are entitled to receive every single dollar of it. Let us make absolutely certain that you do.